comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Alrighty, gentlemen, welcome back to another episode of Final Settlement. Today is Monday, December 22nd, 10:22 a.m. Eastern Time. Last show of the year, boys. We're gonna do something a little special, a little different for the last show of the year. We're gonna do some, I don't know if you want to call them awards, but top moments of the year, top deals, top pieces of signal, top pieces of noise, some predictions for 2026. And some businesses that we want to see created. So we're going to sort of do a round robin through a lot of these different topics for the year. So I think let's start with top deals of the year. Could be sort of the largest deal in your mind, the most important, the most impactful. Could really span a few different areas. But Liam, we're going to start with you. What is your top most notable deal of the year of 2025?
Well, first of all, Merry Christmas to everybody. It's definitely MGX investing $2 billion into Binance.
That was mine. God damn it. All right, I got to find the second one.
Without a doubt, that was the most impactful. Abu Dhabi-backed sovereign wealth fund paying the business in stablecoins is a little bit of noise, but not quite as much as you might think. It shows that, sovereign-backed, asset managers and wealth funds are thinking about doing massive settlements in stablecoins in particular, and they likely are seeing the signal of, I'm sure that Binance holds a Bitcoin treasury in addition to a BNB treasury, but without a doubt, they're getting deeper into the digital asset space, thinking about stablecoins in a deeper way, and really showing that this market isn't super nascent, for just hobbyists anymore. It really is something that sovereigns are paying attention to in a really big way.
I love it. Yeah, like I said, you stole mine. That was going to be my deal of the year. I will pivot to my second choice. But what I was going to say about this particular deal was, why it struck me as notable or very important, is just sort of like, it's sort of akin to as if Lutnick and Besson are trying to set up the sovereign wealth fund in the U.S. It's similar to as if that sovereign wealth fund in the U.S. had taken a massive stake in Coinbase. And so, I think that would be a pretty big deal if something like that were to happen. And so I think it's sort of the East or Middle East version of that, where Abu Dhabi is, making an infrastructure play, as well as just a statement around, they believe in this asset class and they need to make inroads with various crypto native partners. And so I think this was a large deal, to your point, Liam. Paying in stablecoin was sort of an interesting little fanfare aspect of it, but really just the notional amount, and then just Binance being this long established player, which historically has more so served more of the East as opposed to U.S. clients. Now, obviously, Binance is trying to enter the U.S. as well, but very notable deal. So I would agree with that one. Michael, any thoughts on that one before we go to yours?
No. You see, you're going to throw it to me before you have to come up with your that. No,
Yeah,
I was going to offer that up. No, I think that's good additional color in the contextualizing a sovereign taking a position in Binance. I think the thing I didn't really realize, and a lot of people I don't think do, is Binance's trading volume. This is just calling out just to make Brian even throw him even off more. He's looking up deals right now while we're actually talking. No, but really Binance's trading volume globally, I think, is over 40%. It's crazy. So it's a good point. And like a sovereign it's really smart when you think about historically the UAE being at the forefront of mining, potentially even mining with nuclear. Um, and then the CZ locating to the GCC, and really kind of from a strategic perspective, really smart to sit on the same side of the table as where you're going to be domiciled and where your headquarters and potentially other strategic assets are sitting. So if anything happens and you're disrupting geopolitical capital flows, you kind of have the right team on your side. The deal I looked at that I think personally is even bigger than this, that's just personally, is the MasterCard deal. While it's not closed, I think it was the second largest deal of the year. Deribit was 2.9 billion. I believe this one's rumored at 2.1 billion. And the main reason why is because at the end of the day, all capital flows come from and start from the West, from the regulation that's happening or continuing to happen with the new administration, to stablecoins, Bitcoin, ETFs. And when you see a large company like MasterCard effectively have to put chips on the table and make a very sizable bet across stablecoins and then payment infrastructure along with wallets, it's just a huge signal of what's to come. I think you're seeing it right now with Visa and the crazy momentum they have with Circle, and then some of the advisory work and net settlement, I believe, between banks now. And I think this MasterCard exposure is like also a canary in the coal mine for capital markets in the US, because historically the payment firms have already had crypto vehicles or like Skunkworks Labs already set up. So Visa had been a while. Kyle Sheffield had been, writing to that group since like I think 2018. They've been doing a lot of stuff in Visa crypto, even last bull run, and then MasterCard was on their heels. The point being is, like, a lot of these firms have already had different versions of what they're doing in this space where the banks have been a little historically behind. So if you look and see a MasterCard buying a wallet technology infrastructure provider for 2.1 billion, I think that sets us up for what's going to come in 2026 across the board.
Yep. That's a good one. Okay, so I had a few backup options. One is kind of not really a deal, but like I think Square and Block finally turning on payments at terminals, I think it was a big moment just in terms of the history of that company. And I think that's something that they've been working towards for a number of years. And so I think that was a big deal, but not necessarily a quote unquote deal. What I will say on the actual deal front, and this is sort of a broader group of deals, there was one that sort of exemplified it, but all of the convergence of basically AI infrastructure and Bitcoin mining companies. So there was a number of deals, whether it was Google sort of backstopping an investment from FluidStack into Hut 8. I think there was a couple others related to Cypher mining and TeraWolf. But basically this convergence that we've seen over this past year of basically, people recognizing that there are effectively synergies between Bitcoin miners and the build out of AI infrastructure that's required for, all of the CapEx and spend that's going on in the AI world. And I think this is it's interesting from the standpoint of basically opening up investors' eyes to, I think there's often this notion that, Bitcoin isn't backed by anything. There's no intrinsic value to it. Because most people don't understand how Bitcoin mining works, or that there is physical infrastructure that's supporting the security and strength of the network. And so I think this convergence that we've seen between these two industries, I think, is basically an educational sort of forefront for people to better understand what actually backs up Bitcoin. Like, what is Bitcoin backed by? Well, it's backed by a ton of infrastructure that is actually going to be pretty critical for, at least in this country, the build out of various energy resources and infrastructure. And so I think it shines a light on some of the fundamentals of Bitcoin that don't get really talked about in terms of the mining side of things. And so I think it was an important sort of broader convergence, and there was a number of deals that fell within this sort of theme, but I think that's important going forward, that people recognize Bitcoin is more than just a number on a screen and more than just number go up. It's actually the mining side of things is going to be very critical for us as a nation as we work to build out all of these energy resources and infrastructure to whether it's going back to reindustrialization or that whole topic of that we've really hollowed out a manufacturing base. A lot of this stuff is going to be reshored, and a big part of that is going to be energy infrastructure in particular. And so I think the synergies between what's happening in the AI world and what Bitcoin miners can provide on that side is very interesting as well.
Yeah, I think it's a good call out, the overarching confluence of energy, which you're referencing, and reshoring, and then Bitcoin and AI, because I think historically the market's been pretty unsophisticated around energy production, right? When you think about individuals around solar and Teslas don't really fundamentally understand what the inputs are to make those. But then also the narrative around Bitcoin mining being bad for the universe or bad for the world, and energy production. And so with the proliferation of AI and data centers, and then also the new administration and trying to bring and reshore, you have like the right mix of people understanding or getting educated on energy production. And then ultimately, Bitcoin adds a multifaceted layer to that. So there's the Bitcoin miners that were out there, and then I don't want to say co-opted, but they've been there's been collaboration from the AI infrastructure providers to co-locate and potentially take over. But then the reality is it's just better for the whole ecosystem if you have multiple use cases and you can spin up different different effective use cases for that energy based on whatever it is, whether it's the Bitcoin price, whether it's what's needed from an AI perspective. That didn't all exist before. And so it's been a very interesting year to see like that narrative change all the way to like fusion scientists getting whacked of like what's going on.
Yeah.
So it's a fascinating topic for the year to come in, where I would say in 2024 most people probably wouldn't have that on their bingo card. And a lot of people got educated about energy this year.
Yeah, that's a great way to frame it, sort of broader education around energy. And then also if you just compare it and contrast it to sort of, what the perception of the Bitcoin mining space was prior to, this year or even the year prior was, all the ESG concerns, the environmental concerns, and those sort of went by the wayside as I think partly, people realized that, one, Bitcoin is actually good in the sense of sort of incentivizing the build out of renewable energy sources. But even more than that, it was this recognition that, however, people want to quote Bitcoin using all this energy. Well, AI is going to use way more energy than that. So there was kind of this flippening in terms of like, well, we're okay with the energy because everybody wants all these AI tools and all this infrastructure to be built out. So there was less discussion around like the energy usage and more just around, well, how do we actually be as efficient as possible with all of this infrastructure?
And it already does. This is it's funny. This is like direct. I mean, it might as well be apples to apples, and nobody cared, or everyone cared about energy production or use for Bitcoin. And AI, nobody talks about it. Very few. In the same way that nobody's worried about quantum for anything else, but for Bitcoin, it's like the thing that kills everything. They're very similar. There's there's probably multiple things. We don't have to psychoanalyze why people have their issues with Bitcoin, but that's what it stems from. It's not the fundamentals.
Yeah. All right. So those were the deals of the year.
I was surprised that nobody brought up the Citadel $200 million investment into Kraken, though. That was another one that was big.
Think
That's
about
an
that one.
honorable mention.
Honorable mention, yeah. That was a big one.
And the other interesting aspect too, back to
whoa, is he just changing the? Are we just?
Oh, sorry.
No, go ahead. Go. I was just saying I thought we had 30 topics each. You got an honorable
mentions.
Okay. Well, I was just gonna go back to your MasterCard point and say I thought that was particularly interesting too, because out of the rest of the deals, they're essentially like one or a few decision makers who can really drive those across like Citadel, everything that MGX did, but MasterCard is not necessarily founder owned, not like Stripe did with BVNK. It's essentially a larger group of people, and getting the administrative buy-in from the board, everybody there to really go out and buy a digital asset native firm that many may be seeing as like competing with their existing business, really shows just kind of how how developed the industry has become and how there really can't be ignored. And it's not just necessarily the first movers who can be decision makers of one, like an individual buying Bitcoin. It's still larger companies in general too that are getting the buy-in from their entire boards too, which is interesting.
It's a great call. It hit me mid show. This will be a good recap to put in like written blog form we can take exactly. So 2 things to think about. One is we can have the honorable mentions as they come up, but then also we should come up with one extra honorable mention for predictions, because we're going to have to hold ourselves because they're being written form. So just keep that in mind, at least 2, because I'm trying to work through some predictions. I want to make sure they're credible, because we're going to have to stand behind them a year from now.
You just want multiple. So you've got more than one chance to be right.
Well, I was thinking like, if this was already a good segment, and in a written form, it'll make a good, just a good report.
It'll hold us to our predictions.
It'll be a good report to put back out as well, like so people can read it and just skim through it, because some people don't have time to listen to us.
Okay, on to the next. The next segment is top market update, or notable market update of the year. This could be sort of the top signal of the year, if you will, from either a market structure perspective or otherwise. I will start since I went last round. I'm going to go with ETF flows, generally speaking. So this was from Eric Balkunis late last week. Just looking at the top flows for ETFs broadly. So you can see IBIT, BlackRock's Bitcoin ETF here is number 6 on the list in terms of year-to-date flows, and it's the only fund on this list that has a negative return for the year. So it's as of this screenshot, it was down about 10% on the year, whereas everything else in this top flows chart is materially positive, anywhere from sort of like 7 to 60% on the year. And so to me, this is a strong signal, just in the sense of, given a roughly flat to down year, there's still been incredible uptake of these new ETF products. And I say new; they've been around for almost 2 years now. But as we know, sort of the access to these things, the solicitation from a brokerage perspective is still in the process of opening up and widening. So these are pretty remarkable numbers, given 1, the sort of access that is still opening, and then 2, the return of Bitcoin on the year being sort of suboptimal, or at least lower than people's expectations. And despite that, there's been strong positive inflows to this product and more broadly the Bitcoin ETF products. And I think this also says something about, if you're thinking about sort of, why has the price done what it's done this year? And Jordy Visser had the piece a few weeks ago around sort of this IPO moment and this handoff in terms of distribution from longer term holders. I think that's part of what's going on here, and you could look at some of this data as supportive of that, in the sense that new buyers, coming through the ETFs, whether it's institutional allocators or just individuals in their brokerage accounts that may be net new to the asset. They don't have some of the same baggage that a lot of existing holders had in terms of thinking about 4-year Bitcoin cycles, or just thinking that they want to sort of preempt any sort of sell-off that was expected after a blow-off top, because I think there was a lot of that happening in the market this year, where people were anchoring to those historical patterns on the chart. And I think the new entrants, whether it's institutions or just individuals in their brokerage account, like, they don't have those same anchoring biases. And so I think people are establishing positions here, and they're buying on weakness, and they're legging into this asset. And I think this data is reflective of that. So I thought that this was a pretty strong signal, despite the price performance, which was underwhelming to folks. I think this is a super strong and positive signal, despite that. Thoughts?
I think this is the closest I've been able to come at this exact moment of like the capital inflows for the past year and the price action. And it's 3 things happening in my view. One is we've still been in a quasi, or what we would think of as historical bear market, meaning net new like retail buyers not stepping in. The ETF brought in flows from people that have heard about Bitcoin for 15 years and couldn't get exposure outside of the traditional brokerage, and that's what the ETF flows are. And then with the cherry on top of institutional buy-in, I think that very similar to the gold flows, a lot of gold with sovereign and institutions, mainly sovereigns, not necessarily retail capital. So you take that, you take the heavy selling that we've seen on chain, coupled with not net new buyers that have historically existed in a Bitcoin market. And that sets us up for where we're at in price point today. But then if everything goes as planned, 2026 should be expected. And we can talk about that in the prediction markets. But anyway, I think that's to apt like deal, because I think that two things can happen at once, is that net new buyers are coming in via ETF because they never had exposure. But to your point, like the people that are traditionally speculating, interested in markets, that reflexivity hasn't been there because of the tampered volatility. And when that comes back, that's when we'll really see a bull run.
Agreed. All right, Mike, we're going to you. What do you got? Top signal of the year.
Top signal, to your point, like more thematic. We can call out one because there's no shortage of examples, but really the banks and stablecoins. I think that whether it's the OCC, I feel like there's a new letter coming out every week. Banks around custody, what just happened around the bank charters, and then the proliferation of stablecoins with those banks and everyone trying to make a play there. It's still early. I still don't think most people will know how to utilize. They will create. There'll be one part design surface just being implemented and entrepreneurs and use cases that come. There'll be other time just taking inertia. It's just like turning on the internet. People have to figure out what to do with it. But that is insanely bullish for this whole industry, because as dollars become digitized, you just reduce that friction by, I believe, in my opinion, an order of magnitude into BTC, because of whether it's the products that'll be created or just the mental awareness or understanding that money can be digital. And you'll see more products with Bitcoin next to stable coins. And so I think of that as just a huge boon that will set up for 2026, especially like the banks. Like in my view, this is like the Trojan horse for banks and Bitcoin, because they're all focused on stable coins. I think most don't believe Bitcoin goes to the numbers we believe or can be a global financial asset like we believe it can be, but they believe stable coins can do that. And so by layering in stable coins, they're already setting up wallet infrastructure and just that aperture internally from an organizational perspective. And so it's not that they forgot about Bitcoin, but they prioritize stable coins. And as Bitcoin's price rises, that will naturally accelerate and incentivize them to have a strategic Bitcoin plan.
Yeah, it's a good one. Maybe not the sexiest or most interesting. I think stablecoins are kind of boring. And I think there's also some noise that's associated with it too. Like, did you see this last week? Coinbase launched custom stablecoins. So anyone can create a stablecoin for your business, or just you as a person. We're going to do Mikey USD, Liam USD. So there is some noise, but I would say you're spot on in the sense that I think stablecoins, as we've discussed on this show, it's a natural path or sort of evolution of getting people comfortable with digital assets effectively and normalizing them to the point of you have your US dollar stablecoin right next to your Bitcoin, right next to your stocks. Like that's the world we're headed towards. And so I think stablecoins, generally speaking, if you're thinking about the U.S. government and why they've gotten so excited about this, passing the Genius Act, what I had up earlier on the screen of FDIC allowing basically any banks to issue their own stablecoins as well, which I think was a question for a while, whether that would be the case. So they're really opening the floodgates for this, and I think it's part of a larger plan to extend dollar dominance and basically continue to kick the can down the road in terms of one, just sort of greater distribution, right, of allowing people to access digital dollars from anywhere in the world, but also filling a gap that there is that's been growing in terms of basically U.S. Treasury demand. So it's part of a broader plan, and I think it's to your point, whether they know it or not, it's part of a broader story that will familiarize people with digital assets and ultimately get people to the understanding of spending dollars and saving Bitcoin is kind of where we're headed.
Yeah, and one just thing to add to that, I don't even think it has to be fully looked at as theoretical. It's not the biggest leap to reference that every $100 billion that comes into stablecoins adds 5% to Bitcoin's market cap. And the way I back into that is just looking at what Tether's total stable coin, let's call it 200 billion roughly, and the total crypto market cap's like 2.5 trillion, so that's 10%. Point being is like you can make the case that Bitcoin couldn't get to this market cap without a trading pair that had global reach, and so that's at a very micro level, right? When you think about total, trillions of dollars in bonds and dollars. So I think that's the overarching essence of it is like you look at what Tether's done in a very small world that has been digital assets, and what happens with the global financial system has stable coins.
100%, especially when there are hedge funds and other asset managers who need to trade Bitcoin or digital assets in general, and there's no way to wire dollars on the weekend. And so having that stablecoin pair there and is going to be crucial for those who don't necessarily they can't get their compliance board or the compliance team on board with Tether and just say have established relationships with JP Morgan or Citi or whoever else. So as they offer stablecoins, they're just going to naturally be more familiar with those teams and able to turn on those products prior to any digital asset native firm, whether, that's the right move or not.
Well said. All right, Liam, what do you got? Top signal of the year or market update?
Harvard holding $100 or $500,000 worth of Bitcoin, as well as I think it was $100,000 worth of gold. I mean, gold's price in itself too could be a signal of the year too, but it's just the two of the asset classes going in tandem. Endowments starting to put on meaningful positions in Bitcoin, and them being okay with signaling that to the market too. If they wanted to, they could have, held Bitcoin spot and not had to disclose that because it's a ETF. They wouldn't have had to disclose spot Bitcoin, but they were comfortable with, any negative sentiment that Bitcoin had and gold in general too. And so I think that is just a sign of how far we've come and a signal that, the most well-respected and oldest university in America is willing to put on fairly large positions of both Bitcoin and gold in general, showing that sound money is kind of making a comeback.
I love it. That's a great one. It's funny. We had Tad Smith on the last trade a few weeks ago, and we were talking a bit about that. And he initially, thought maybe that they were just doing some sort of basis trade and they didn't actually have a long-term fundamental view on it. I think I kind of talked him off that by the end of the conversation. And part of my rationale was, to your point, that when they disclosed this, it was in tandem with the gold allocation. So it did really feel like they had sort of a sound money thesis in implementing both of those exposures. And so I guess it's possible that they are doing some basis trade, but my sort of base assumption is that they do have a long-term view on the asset, and I think that would also be supported by them adding to the exposure. So I think the first disclosure was sometime over the summer, and then at the end of the third quarter they had tripled the position. So I think that's a great one, Liam. I think that's a massive signal for the year. Whether it's talking about who's selling, whether it's the OG whales or just retail participants who don't understand what they own. There's been more talk about who's selling, but the real signal is, well, who's buying, who's stepping into these positions in the absence of those people. And so I would agree. I think that's a big one for this year.
Yeah, it's a great call. I mean, it further underpins the debasement trade was really just it feels like a 2-week driven narrative. But the sophisticated investors have historically understand commodities are what you want in a inflationary environment. And that's what Harvard is, a sophisticated investor. And so I think them putting their, money where their mouth is setting up for other investors to naturally step into that trade in 2026.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. Onramp's multi-institution custody distributes control across 3 independent regulated key holders in a 2 of 3 quorum. No single point of failure, no pooled or omnibus exposure, segregated client-titled vaults. You retain full legal ownership while Onramp coordinates security, compliance, and operational workflows behind the scenes. It's strength of many delivered through the simplicity of one. Multi-institution custody is the foundation for everything we build. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now, Onramp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible now than ever. Onramp, strength in many, simplicity in one. To learn more, check out onrampbitcoin.com.
Agreed. Okay. Moving on. Top piece of noise for the year. And Mike, we're going to start with you. Let's make it spicy.
Well, we have such great comments in the YouTube channel, so I have to just stay true to the comments. It could, without a question, unequivocally, is digital asset treasury companies. It's so much noise because the big problem was that we talked about it so much. And I feel like part of it was being forced from the general market sentiment, so having to address it. And then the other part is, ultimately, this is a very long game we're playing, I'm personally playing. And so when I think about what we do as, whether it's regulated or unregulated fiduciaries of individuals' capital, specifically in what truly is the Wild West of a digital bearer asset, what do you do with it? How do you manage it? How do you secure it? Because I've seen this, I've been around long enough to understand it's very easy to buy Bitcoin. It's hard to hold it long term. And every few years, there's a net new thing that comes in and takes people's Bitcoin. And even if it doesn't necessarily take exactly your Bitcoin, if you're parking dollars in something versus BTC because you believe it's close to Bitcoin or you're going to get more Bitcoin, it's the same thing in my view. And so that's why on the other side, it's forced to discuss it and really discuss from a first principle perspective on how on a long time horizon, it looks like the time horizon was this year, they don't actually make much sense. And so, that's in my view, the easiest noise is the digital asset treasury companies. And then maybe the last part is like, I think everyone would agree DATs for crypto don't make sense. But then when it's, in the beauty, and this is how you always know you're in a Ponzi or a scam, and this is how crypto people feel, because when they sit in a room with other crypto people, they will generally say, well, your unregistered security is that's an unregistered security, but mine is a registered security or a tokenized equity or a meme coin or whatever it is, but not
collectible.
Mine. It's a collectible,
not a security. Yeah.
Not a security. It's a commodity. And so it's very similar in the digital asset treasury space, whether it's an Ethereum, Solana, or let's go to Bitcoin. Digital asset treasury company, it's like, no, but mine is better. The one that I am exposed to, the other ones aren't. And so you really got to take a step back. And if that is the logic, well, then it might be the case that they all don't make sense, not that the others are the ones at fault. And so, yeah.
It's a good one. I didn't even think about that one because I knew you were going to use it. So, Liam, what do you got? Biggest noise of the year?
No, it was, I knew that one would definitely come up and agreed there. It was definitely Doge, and I'm just going to do Doge itself because there's another one, but I might save that for you, Brian. There was never any meaningful buy-in from different parts of the government in order to cut spending significantly, thinking that we would be able to have 3% deficit to GDP is, absolutely unreasonable. There is no interest from anybody in the federal government, or at least, getting the bureaucratic ideal, machine onto cutting significantly, especially when there are things that are quote unquote untouchable: Social Security, Medicare, Medicaid, as well as national defense. So I would say that was definitely the noise of the year, in my view.
It's a good one. I am going to go with broadly just cycle theory, like cycle brain, 4-year cycle thinking, I think was the biggest noise of this year. I think it led a lot of people probably to sell their position when, I think if you're considering the broader market structure, the macro liquidity environment, and where, that is all headed, that trajectory. I just think the sort of Bitcoin centric cycle thinking is dead. And I think that would be supported by as we sit here today, I think we're a little under 90K. We started the year at, 93, 95, whatever it was. So unless we run through the end of the year this is going to be a red year. So if that is the case, then the cycle theory is over. Because if you're, ascribing to that historical pattern, then this year, 2025, should have been a green year, and 2026 would set up to be a red year. And I think we're just past that. Now, I would say, broadly speaking, market participants do not seem like they're past that. I think and that's why I call it out as the noise of the year, because I think there's just been too much focus on it, generally speaking. And the sort of oldest phrase in investing or finance is like, past performance is not indicative of future results. And I think nothing could be more apt or true in this sense that, just looking at the chart and drawing lines on it, doing some TA and just saying, well, this is when we need to sell because this is when it sells off, is just, it's not based on anything fundamental at this point, at this stage of Bitcoin's maturity as a macro asset. Being integrated into institutional portfolios, sovereign portfolios, the market structure has fundamentally changed. And so I think people that are still sort of holding on to that mental model of thinking around trading around this asset, I think are going to get hurt basically into next year if they thought that 2026 was guaranteed to be a down year and they sold their position. So I think there's going to be a lot of that, and it's going to be a very hated rally in 2026.
Yeah, it's a great call out. It goes back to the whole when the facts change, I change my view. What do you do? I think, I won't even try to pontificate if cycles existed or didn't. I think you could probably make the case that they did previously because of the size of the asset and inflows and liquidity and halvings. But end of day, I like the call up for noise because there's a lot of really well-intentioned and thoughtful individuals that sit on the macro side of things that are calling for end of a cycle or end of a bull run or whatever you want to call it. But they only have one piece of the picture, or they have multiple pieces, but they don't have the full picture because they don't understand whether it's on the liquidity side, but also really around the market structure side, which has fundamentally changed. And that's changed from a geopolitical perspective with what gold's doing is a big thing that should signal that, this notion of a commodity and sound assets might be running a lot longer than anybody expects. But then also from a administration and regulatory and traditional financial markets and what's happening there, and all those things don't get turned on and then capital doesn't come into the system. And so it's like a fool's errand just to map a legacy or old mental model of Bitcoin cycles and map it to where we sit today, because it doesn't exist in a vacuum. So I think that is a good one. Liam, I know you have some thoughts, but we got to go to the honorable mention after for quantum because I don't know how that didn't come up.
Late entry to noise of the year. Been very noisy over the past few weeks.
Go.
I also was going to say the strategic Bitcoin reserve. Do you guys remember we're going to revalue our gold? That was even more out there. But to your point on cycles, no, I agree. I agree that 4-year cycles, just looking at that in a vacuum doesn't make sense. I do think that cycles for Bitcoin or bubbles forming and then getting deflated to some degree are still going to be, are still going to exist as the asset monetizes. Anytime that there's a truly transformative asset or new technology or invention, it attracts both a lot of serious interest as well as a lot of speculation, a lot of misinformed or people who think that the asset will evolve one way and it doesn't actually end up going to that degree. And then, that capital will be destroyed by misinformed ways of how the asset will actually monetize and differing opinions on timelines. But agree that having a 4-year cycle in itself doesn't make any sense moving forward.
Here's the conversation no one wants to have. If something happened to you tomorrow, could your family access your Bitcoin? Really think about it. The seed phrase hidden in your house, the hardware wallet in the safe, that complex multi-sig setup. You understand it, but does your spouse? Do your children? Billions in Bitcoin are already lost forever because people did not plan for this moment. Onramp's inheritance solution is built into our multi-institution custody from day one. 3 institutions, clear beneficiary designation, and professional succession planning. No technical knowledge required from your heirs. And with our new flat tier pricing starting at $250 monthly, your family won't face surprise custody costs just because Bitcoin appreciated. The same predictable fee whether Bitcoin hits 200K or 2 million. Don't leave your family's future to chance. There's strength in many. Visit onrampbitcoin.com/inheritance. That is onrampbitcoin.com/inheritance.
Well said. All right. I think we're past the noise, so now we're on to predictions.
Can we just do a little quantum noise just to make sure?
Sure.
Well, I think tomorrow we're going to do a bigger quantum. We have some special guests tomorrow for last trade, but the quantum stuff, I don't necessarily know how to describe how much sell pressure has happened from quantum, but just how insane the concern and fear mongering around quantum just has to be called out. I think mainly there's a number of reasons, but one of them is just because this has always been a concern for Bitcoin. Nothing changed. Like AI as a meme has helped accelerate the notion that like somehow, even though they're kind of interrelated or interdependent, but either way, honorable mention simply because there is a lot of people worried about quantum. And I think probably my main call out is there's a whole slew of 10 other things in their life that would be much greater impact than their Bitcoin position. And that's if they're all in Bitcoin. So if they have a 2% position and it's just all probability weighting, like, is it greater than 2%? You know, like why worry about it? Why be concerned? So anyway, it's a very fascinating thing, and it feels very narrative driven, and honestly, more of like you got Ray Dalio coming out and talking about quantum, and it really since the beginning has felt, or like middle of this year when it's picking up steam, felt more of like a psyop than anything, to be honest.
It feels like the last real thing that they have against Bitcoin. Like Bitcoin's almost defeated every other timeline or reason why it would potentially fail. And so I think that's honestly the only thing that detractors, people who have missed out, haters, just no coiners really want to push to a high degree, because it's the only real thing that that you can really have against Bitcoin at this point. I think it's pretty much like almost one other than that.
That is a good point. It is sort of the last remaining FUD. The other thing I would say is, the reason why I find the discourse particularly noisy on this topic is just given the incentives at play. So basically, the people who are fear mongering the most have some exposure to either quantum companies, or they are a researcher in the field that benefits from these things progressing on a faster timescale. And so it becomes very hard to distinguish the signal from the noise when the sort of quote unquote experts are financially incentivized to tell a certain story. And so I think that needs to be taken into account when assessing any of this stuff, because I think there's just one way of looking at this, in the sense of, like, to your point, Michael, like this has been a known potential risk sort of forever. And like, to put it simply, like the devs are deving. Like there are BIP proposals. There are various white papers and thoughts around what would need to be done if this risk materializes. And so, I don't think there's any really cause for concern or like, arguing with Adam Back on Twitter. Like it's very misplaced. And I think it does more harm than good in terms of having a constructive conversation around, what a potential path looks like if and when it's ever needed. So yeah, I think it's certainly very noisy right now. And to your point, Liam, like it's kind of the last remaining thing that people can hang their hats on in terms of flooding Bitcoin. And I think there's also a component of like people want to explain the price action by something. So it's, to your point, Michael, like I don't know how much of selling actually was a result of people being fearful about quantum, or if it was just normal price volatility and then people trying to attach an explanation to it, as often happens in markets. So that could be sort of the other side of it as well. All right, that's a lot of noise. There was a lot of noise this year, I will say. But let's go to predictions. I guess I'll go first. I think it's my turn to go first here. I had a couple. The one I'll say is certainly more bullish than the other one, which I'll save for honorable mention. But I think the U.S. government buys Bitcoin in a budget neutral way in 26. I think Lutnick and Bessent figure out a way to do it, whether it's in the sovereign wealth fund, whether they just attach it to some executive order around the existing sort of Bitcoin reserve, or if it's in some other vehicle. I think they figure out a way to buy Bitcoin. I think if you listen to anything, this was going to be one of my honorable mentions for signal of the year, was just basically anything that Bessent said this year. I think was very high signal in terms of wanting to basically run the economy hot. You better own assets. Gold going up is good for America. Him loving Bitcoin on white paper day and sending out tweets around why Bitcoin is so resilient. I think they're going to figure out how to buy Bitcoin next year. I think it was probably too much enthusiasm and anticipation sort of post-election and thinking it was going to happen overnight. But I am remaining bullish and confident that Bessent and Lutnick figure out how to buy Bitcoin next year.
Yeah,
Thoughts?
I like that. I don't think I think Doge was noise. I don't think the SBR was noise. I think that these things just take time.
Agreed.
And a lot of this year was setting the stage for what's going to ensue in 2026. And again, I don't think of Bitcoin in a vacuum in these discussions. I think of them from a geopolitical perspective. I think of them from the notion of we have to onshore. I think of inflation and gold. And there's a big opportunity for the U.S. to really wrap their arms around Bitcoin. And some of these things may be, from a game theory perspective, not the best when you think about digital asset treasury companies centralizing here, and then also ETF flows and SBR. But at the end of the day, it doesn't necessarily matter what we think. It's just about what the market incentives are. And I think the market incentives for the U.S. Is to have that, and then really be the capital market leader for this space. And so I think it's a good call that we see something like that, or some traction in the SBR stage in the U.S. next year.
All right.
Do you want me to go, or do you have anything, Liam?
Who wants to go next?
I'm happy to go, unless Liam, you want to go.
Go for it, Michael.
So I think we get the triples. You get triple directionally, because I think it's a little bullish, but I think directionally we see a triple in BTC price from where we're at today, triple in gold price that we're at today, and also triple in M&A action. So M&A, I believe, for this year is about $8.6 billion for 2025, which is like far and away more than we've seen in the historical markets on an annualized basis.
Is that crypto specific M&A?
Yeah.
Nice.
So I think we get roughly 24 billion next year. I think gold sits in the directional. I wanted to go double, but that's not sexy enough. So I go triple. So in the 10 to 12K a troy ounce range. And then Bitcoin does its thing, and we get the, $200,000 to $250,000.
Dude,
price.
if gold triples, you think Bitcoin's only tripling?
I think it's a good point. I think that in the same lens, not necessarily I believe this, but it's worth bringing up, in the same lens of like gold running and then Bitcoin running. We saw that happen once, and then everyone says like, now Bitcoin has to follow suit.
Right.
I think at a certain point that may be true, but gold is 30 trillion and Bitcoin's 2 trillion. So those flows, it's the whole like, it's not directly correlated per se. They just may have been, it ran, and then there's other flow coming in. It could have been tied to ETFs, liquidity, whatever. But to your point, I don't necessarily would bet on that. I think that, if gold is going to triple, then you might see a greater performance from BTC. The problem with that, though, it still ties back to liquidity. You have trillions of dollars that sovereigns are sitting into in bonds. And if they're looking at gold as a stable unit to replace some of that bond exposure, that makes a lot more sense than the leap to go into Bitcoin. That's the thing I think we all forget about. It's like, it's very easy for an individual to take out of the equity or bond market to go into Bitcoin in a heavy size, but for a sovereign and somebody that's managing, and if quantum is a thing, or if they're concerned with it. And that was the whole point about like the education around Bitcoin. It's like the hardcore people can't even realize if quantum's a thing or not. So how are nation states supposed to, and others? And so that's the idea, again, behind speculative exposures. Most people haven't been able to do the work to de-risk the asset.
I like it. I like it.
What do you got, Liam?
Mine is fairly similar. On a two-part basis, it's not exactly the same for sure.
Well, it can be. You have to pick something different.
It's only to one of your points. It's the banks that are coming into this space, they're going to push back all their timelines of when they actually launch stablecoins and crypto native products lending against Bitcoin. And I think we're going to see acquisitions from banks of the large digital asset exchanges, like either Kraken, Gemini, et cetera, just like an entire acquisition because they don't want any other B2B2C offerings. And even I could see a hostile takeover of interest of something like Coinbase just to own the entire consumer experience. I think that these banks are going to realize that they really want to control the flows and know that the first mover advantage is going to be really, really significant, especially as most young people interact directly with fintechs and neobanks rather than banks in particular. So I would imagine we see almost in if it what was M&A 24 billion this year. I think we could see that.
I was saying 24 next year.
Oh, okay. Yeah, I think we could see 24 or something just in one deal.
Wow.
And yeah, so I think that's kind of going to be what happens next year.
I like it.
I like that a lot. It's a great call because I think we fully really underappreciate, maybe not here, but like in the market, how crazy the transaction and integration of stable coins and digital assets that's happened this past year. When you think about half of it, more than likely was just the pent up demand, but all of the regulatory concerns. But then also the other half is, powers that be signaling pre-administration. Because I know of some very large firms that, they saw the new administration coming and they realized they had to get their very core stuff in place, call it stablecoins as an example, that slowed down some of the Bitcoin products that they were going to launch. And if we saw that this hot and heavy this early, what happens in 2026? And the cousin or like the relationship that I think we could see play out, what you're describing, is basically what happened to AI this year, as we see happens to digital assets next year, where everyone has to have a position, everything gets digitized, right? If like that's the notion of this second half of 2025 was all stable coins, that it's setting up for that narrative in 2026. And to your point, these things get overbought, overpaid for, which makes it really interesting what we're working on, because what people realize multi-institution is it differentiated. They don't have to believe it's the end all be all, but if they're looking for firms that are building on a differentiated form of custody that's more robust, that's what's exciting about what we're building and investing in, because a lot of these companies will naturally have huge opportunities to integrate, be acquired by these large firms.
I would 100% agree. I also, one other thing that I forgot to mention that I do think is key to all of this, whether we see it or not, is just the market structure bills. They want to see what ends up being the final wording and nomenclature around all of that, because I'm sure that all those banks are at least doing the preliminary due diligence, even if they're not having conversations with a number of these types of firms, and they're trying to decide what actually makes sense. But I think that they're trying to wait on what exactly the legislation will be prior to going out and doing, like, going full speed ahead on either building in-house or acquisitions.
Agreed. My my honorable mention for prediction was a little bit more on the bearish side, but I do think that both physical and digital attack risk is going to continue to accelerate. I think Jameson Lopp, who's done a very good job of cataloging a lot of the whether it's physical attacks or digital phishing attacks over the past several years. He tweeted the other day, like, I give up, like there's too much. So he's not even going to be maintaining that going forward. So maybe Onramp or us at Early Riders picks up the mantle of tracking that stuff, because I do think it's only going to accelerate from here as one, Bitcoin continues to monetize, but two, really, more and more criminal networks unfortunately wake up to the realities of a digital bearer asset and realize that a lot of people, 70% of the Bitcoin still sits in some form of hardware device. and another huge chunk sits on exchanges that could be digitally manipulated as well. So sort of unfortunate, but I expect that stuff to accelerate in 26.
Damn, you got my honorable mention. So I was going to go the triples again, and I do think we basically get triple hacks, losses, and unfortunately the kidnappings, because as the price rises, you see that occur. And this kind of is supported when you think about. I'll pull it up here. It just came out. Chainalysis put out a report around this year record 2 billion in crypto theft just from North Korea. And I believe it pushes the all-time high from North Korea, 6.75 billion. Again, these numbers are insane when you think about $6.75 billion from one nation state, 51% year over year. And this is, again, just in the hacks. That's not to talk about physical threats. And I do fully expect to see next year, part of that prediction, maybe this one's spicier, is you'll see a digital asset treasury company lose the funds because they're very unsophisticated. Talk to a lot of them. You think about historically the time it takes to understand Bitcoin from a personal perspective, just to put, a personal sizing for your balance sheet. And you have to learn keys and multi-sig and all the things. And a lot of these digital asset treasury companies have focused solely on the capital market side. And a lot of their treasurers and CFOs have never set up a Bitcoin wallet before. And so when you think about social engineering and all the different things that come along with the asset appreciation, means that there's more risk out there. Fully expect to see that happen. And it's just a reality of a new form of money interacting online that can be taken from anywhere, whether it's physically or digitally. So yeah.
Yep. Agreed. All right. I think we're to the last segment, boys. The business we want to see created in 2026. Liam, maybe we'll start with you. What do you got?
Yeah, this one, I think that there is a really interesting opportunity to start small from the stablecoin banking layer, essentially being there needs to be folks who are in college and start a local community bank, start off with very small targets of local community folks who are younger and more open to stablecoin banking accounts, and offer them essentially all financial services and banking services, starting off on a localized level. A lot of differentiation really comes from distribution. And I think that that's a real opportunity to, just because a lot of local banking relationships still happen, but they are extremely slow, and upgrading that with stablecoins can be, significantly valuable, as well as offering just this checking account of stablecoins in particular, and then savings accounts in Bitcoin, is something that is definitely sorely needed out there. And by starting small and having low customer acquisition costs through, local universities where you have young people who are digitally native and willing to try out and use stablecoins and Bitcoin in particular, is an easy way to start into that, and then have a fairly easy way to just get acquired. So that was one thing that I think just needs to exist.
I like it. Mike, what do you got?
Yeah, I have something somewhat similar. I think that finance is digitizing, the world's changing, and I think that there's a lot of narrative going on, and we've talked a little bit about this, that this notion of like crypto investing in a vacuum is probably a fool's errand moving forward, and Bitcoin only investing moving forward is also kind of a fool's errand, in the sense that when you think about TradFi and user adoption is multifaceted. Most people, we can't expect them to get to 100% BTC overnight. They don't even get there over the course of a decade, let alone overnight. And so I think building best in class financial service businesses wrapped around some of these core trading pairs, which is stablecoins for an easy movement of capital, BTC, specifically Bitcoin on multi-institution custody, because you naturally give the underlying user more assurances on whatever allocation they decide, and then gold and equities, because regardless of equities specifically being overpriced, people still have their exposure and will naturally, I think in our view, will cycle out of them, but they still want to see those assets. And then gold, but again, gold and Bitcoin in particular in best in class ways, because gold, as another example, historically, the only way for retail to really get their exposure is via GLD. Most people don't know how to get spot. They wouldn't even know where to buy it from if they had to go. You have to call it, your local bullion dealers, figure out, what's the cost over spot, what are your fees, versus being able to buy it via like a digital broker, know that you can take delivery if you decided to. That could be part of the solution, or you at least have better assurances, whether it's the bullion vault that it's sitting at. I think these product doesn't even necessarily have to have all four of those. I think that there's going to be nice opportunities with stablecoins and Bitcoin together, and then any of those other two that don't really take a lot of cost in 2026 when you think about these products and services from a Rails perspective have already been created, whether it's multi-institution, a lot of B2B2C creation around money transmission to get exposure from dollars to BTC. You don't have to go get those money transmission licenses. Multi-institution's been stood up, and now there's a lot of different opportunities, whether it's like Paxos, Tether, Argo, developing gold products where you can potentially take delivery. Still early, but those are coming about. I think the number of gold stablecoins is like at all-time high, like close to $4 billion. So I think that those products and services will be ripe to what Liam was touching on for acquisition. Some will just be amazing business models. Others, individuals might want to just exit because they'll also get increased distribution by being at larger firms, whether it's regional banks or larger TradFi firms. They just don't have the acuity and the sophistication to build these products. Because I think that's a big part that people discount. Is it's one thing to integrate and build a product like this or anything related to what we're talking about. It's a completely other thing to market it, because you have to be able to have the level of tact and sophistication to explain to the market how you can insert these other assets into a modern portfolio that doesn't completely like squash or just talk down to the other products that these large institutions are selling, while still being able to evangelize and explain why you would want gold or Bitcoin in a modern portfolio.
I like it. I thought you were going to go with sat stacking app, Michael. Could have sworn you were going to go with that.
That can be part of that. I think there's different flavors. That's the beauty of traditional like financial services, is everyone interacts with their banking partner in a different way, and there's different segments of the market, and that's what makes this opportunity. It's all the money in the world's up for grabs. So I think different implementations, that's what matters more than honestly all of that. It's like, what's your area of the market you're going to go and kind of target from a distribution perspective, and then grow from there.
Yeah. That's a really good point. I'm going to go with it's a little self-serving in terms of what we're doing at Onramp and sort of the proliferation of multi-institution custody. But I would like to see a neutral Switzerland-based key agent that is designed specifically to participate in multi-institution custody quorums. And so the real value prop and key would be its neutrality and reliability, always fulfilling the obligation to sign while participating in some sort of multi-sig quorum. And I think that this will be very important just for the maturation and proliferation of MIC as a standard. So being able to have basically an external quorum participant that sits in Switzerland, so you can add this to quorums and increase the sort of geographical diversification in terms of key holders. I think that would be a very powerful business model that ultimately, if we're right about MIC being a standard, that those types of businesses will have to exist all around the world. I just think Switzerland feels like a natural sort of first order for this sort of neutral key signer to exist. So that's something I would like to see. Let us know if anyone is building that. There's like entities in Switzerland that could pivot to this pretty easily, but I do think that there's an opportunity for a net new business to drive towards this.
All right. Had a great conversation this week with Matthew Montgomery of Mavelo. Matthew's the founder and managing director. He brings 20 plus years of oil and gas experience, and his fund strategy focuses on the mineral royalty space. Now, listeners of the show may be more familiar with Bitcoin than they are the mineral and royalty space, and don't worry, we covered both. We discussed how Matthew is pioneering Bitcoin as part of his fund investment strategy and why both energy prices and Bitcoin will go much higher. Excited for this and for Matthew and the Mavlo team because I ultimately think that Bitcoin will get in the hands of many investors through investment strategies like this. And so excited for you to check out this episode, get perspectives that maybe are different from you. I think you'll learn from it as I did as well. So enjoy this one. And thanks for tuning in to Scarce Assets.
Yeah, definitely. I think this is something that's been on the radar for a while. There's a lot of gaps in other Bitcoin companies adopting multi-institution. And a big part of it is anybody that would want to participate has its own, I always call them warts, probably the better way to phrase it, but every company has its own competitive forces. And so sometimes it can preclude somebody from partnering, where if you naturally have an agnostic key signer, similar to like a AWS with keys set up in different parts of the regulatory regimes, can sit there. I was randomly just talking to somebody well known in the space about this in general. And all of these things that we brought up, to Brian's point, like reach out, because these are the things that, we know people that are looking at it, interested, and that's part of our build program at Early Riders is looking at, seeding and getting these things off the ground. Could be an interesting opportunity for next year's Stables inaugural round for somebody coming down to Texas to build, to get something set up. So I think we're going to try to do this, every other week, is talk about different products and services. Maybe we'll even go deeper here, because I think as we grow our following and viewership, these will be really great ways to at least put out in the discourse. And even if you don't come to us for funding, like these things just need to exist. So yeah, it's a great call.
Very well said. All right, boys. I think that was a pretty good recap show. Is there anything we should call out for the audience to reply in the comments? Maybe prediction of the year, if audience members have predictions for 2026?
Yeah, I'd love to hear predictions. If you think we're off base on our predictions too, call them out. Would love to hear any other feedback, and any other segments that you think we should be talking about in the future would be great to hear as well.
I don't have it in front of me, but we'll do an end of year Christmas gift. Whoever has the best startup idea, in the comments, I have a nice Onramp vest that I will ship.
Rare vest.
Rare Onramp vest. So yeah, I don't know if it'd make more sense if I had to share it to give people interest. I can go grab it, but if not, Onramp vest, limited edition for the best. And the way because it'll be objective, is whichever business idea that gets the most likes by January 1, or by the next episode, whenever we're recording the next episode.
I like that.
So it'll have about 2 weeks to run.
All right. You heard it here first, boys. Sound off in the comments. Win a vest. Potentially win a very rare limited edition Onramp vest.
Merry Christmas, Happy New Year, and we'll see everybody in the new year, 2026. Big year for everyone.
Thanks, boys. Appreciate it.
Merry Christmas. Thanks.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.